Today we're going to be talking about all things recruiting and negotiating and salaries in Web3, and I have some awesome guys here who are experts and can tell you so much about it. So let's just get started with some opening thoughts on how the space in Web3 is different from Web2 when it comes to recruiting, negotiating, and sort of give us a top line view of how you think Web3 is unique in that regard.
Totally. You want to kick off?
Yeah, sure. I mean, I think it's a broad question. I think we should understand that the Web3 landscape is changing, obviously, all the time. So, hiring in Web3 6 months to a year ago is different than hiring in Web3 at the moment. So, there's a lot of interesting trends I could talk about. I know Daniel's going to talk a little bit about, hiring at the early stages of a crypto company, and I would say one of those key hires is, of course, going to be an engineer in the beginning of when you're building your product initially. So I would say during this down market, like one of the trends that I've noticed when hiring engineers is the crypto native languages like Solidity, Rust, the smart contracts engineers, their value in the market has maintained pretty stable throughout the crash. But in the bull run, we were paying a lot of Web 2 engineers based on their future value once they have learned, Solidity, Rust, and things like that. So you were seeing really, really large packages for people who didn't necessarily have the skill sets that were needed for day one. And I think, during this market, we're not seeing that quite as much. We've seen the Web 2 packages come down to earth a little bit, and so we're seeing talent come into the market that's really motivated by mission, not money in that regard. So, yeah, I would say that's one trend, and we have a few more we could talk about, but I'll kick it over to Daniel to give you some data points around it. Yeah, should we do intros? What do you think?
Yeah.
Cool. Just to give everyone a little bit of context, I'm a recruiter of about 10 years. Previous to starting my company up top, I was placing quants at high-frequency trading and prop trading shops. I took the bucket of quants that I had and one day realized that these are the same guys that all the crypto funds are looking for. So I came in based on a growing book of quant trading and crypto, and I then realized that most of the VCs in crypto do a little bit of market making and quant trading as well. So I met the team at Framework, started working with them on the trading side, and then came in to build and manage a hiring program for their portfolio of early stage DeFi and blockchain infrastructure companies. And now I've replicated that program with a couple of other VCs, Wintermute, Pantera, just to name a couple that I work with. So pretty good holistic exposure to most of the early stage hiring, and that's what I really enjoy. So hopefully I can give you a couple of good takeaways on that kind of stuff.
Yeah, totally. And I'm Daniel, operating partner at Framework Ventures. As Dan mentioned, we work really closely with his firm up top. If you guys are looking for a recruiting firm in this space, they're absolutely number one. And yeah, I guess a little bit about Framework Ventures. So we're an early stage crypto fund. We manage north of $1 billion in total AUM. Our sweet spot is really pre-seed and seed stage deals, and DeFi infrastructure and Web3 gaming are kind of our three biggest verticals. And yeah, in addition to, I guess for me personally, I joined about a year ago at Framework and been a founder a number of times in the past. So came on to kind of in a dual role where I invest as part of the investment team, and then also help manage operations for companies that we invest in. So basically helping founders build out their business, find product market fit, and do a lot of really important things. And we really quickly realized one of the most important things companies do is recruit, right? And I think that's a big reason for this panel, that there's a tremendous amount of opacity or misinformation even in the space around what people make in crypto, how they make that money in crypto, where they live, where the companies are headquartered, like all these different things. So we'll share some data throughout the panel today on this. We actually, with honestly a lot of input from Dan, put together a survey at Framework of all our portfolio companies, basically tracking all the things I mentioned before, like how many people do you employ, where do they live, how is your company structured, do you pay them in equity, do you pay them in tokens, how much, what are vesting periods, and then we released all this data to our portfolio and then kind of like a watered down version of it to the public. It got covered by a lot of media. It's also on our blog if you want to see it. There's a Twitter thread that has all this information kind of packaged up. So we'll talk about, I guess, some kind of high-level topics and specific things from that here, as well as I think just kind of take you through the journey of like if you're building a Web3 company, maybe where you start, and then how like the considerations you should be thinking about over time in order to structure it and set yourself up for success. So.
Awesome. And yeah, just to add on top of that, I think, there's I get this question all the time from my new clients, like what are some, data points around salaries and token allocation and stuff like that for hires. But at the end of the day, there's really no one-size-fits-all answer to any of this stuff. So Daniel's going to chime in with some relevant data points, and I'll hope to give you some additional color with some real-life examples of what I've seen.
Great. So let's dive into that a little bit. Do you want to share some more information about what the data you have is? If we're talking about average salaries for engineers, what does that look like for someone who's starting out now versus someone who's a little more experienced? And how do those compensation packages vary from company to company? Or is it really just there's no one size fits all?
Yeah, so really great question. And honestly, so our data is very specifically from kind of the tail end of the bull market. Like it was all in like April, May, June when we collected the data points. So we're going to do this again and see how that changes. And that'll be really, you should follow us on Twitter and like you'll see that because I think that's going to be a really fascinating report we're going to do in the next couple of months. I would say as far as like how these things are structured, I mean, talent in Web3, especially on the technical side, is still very scarce. And I think we're starting to see some trends. We're starting to see trends in how companies are built, right? Like I'd say like one big point they'll bring up about like just company composition overall, Web3 companies are generally smaller than Web2 companies, right? Like you have all these examples around Silicon Valley of FANG companies and Series A, B, C startups with hundreds or thousands or tens of thousands or hundreds of thousands of employees. I mean, we have about 120 portfolio companies. I would say the most in our whole portfolio might be like 400 or 500 employees, and the average company is like 18 to 20 employees, I would say.
Yeah, I definitely noticed that when I found out that Yuga Labs, which owns Bored Ape Yacht Club, CryptoPunks, Meebits, Other Side, all that good stuff, they only have about 70, and they're worth over $4 billion, and they have less than 100 employees. So yeah. That's pretty mind blowing to me, totally. Just as someone coming into Web3 from a non-technical side.
For sure, and like you would think that when you're comparing to Web2, and it's like companies with thousands of people, Web3 companies with fewer people, and they're raising similar amounts of money, that like salaries would be astronomically high. I mean, our survey showed like I was actually very surprised by how low a lot of the cash salaries were. I mean, I think it's a function of like, you have a lot of kind of zealots in crypto, like you have people that really believe in the space. And I think in general, like if you're working for a startup, you're not working to get rich off your salary. Like if you're pocketing a bunch of money, you're probably doing something wrong and your company's like not spending that venture money correctly. At least like that's what we would say as a venture fund. So I would say a lot of the upside isn't in cash. Like the salaries are actually relatively low, which I think is probably the way it should be. And people's upside is really structured in like the equity or token allocations they're receiving. And those are actually quite high for a lot of crypto projects. Obviously that's dependent on price. If you're checking your portfolio today, it probably doesn't look so good. But in general, like that's really what people are playing for. And we saw that reflected in the data.
And do you think that's because a lot of these companies are startups? That's why it's sort of we want to give you equity and instead of just a big salary?
Yeah, totally. And Dan, I'd love to hear your thoughts on like the decision-making process, because you talk to a lot of people that are at more traditional companies and are considering moving over to these 18-person like shows that are in Web3, right?
Absolutely, yeah. I have an interesting example I want to share. This is a classic bull market story of some of these. Yeah, this is an interesting one. So up front, this is an extreme example, but it's a real life example. So I remember I was recruiting an engineer out of Lockheed Martin for one of your portfolio companies. At the time at Lockheed Martin, he was making $115,000, 115, right? He was engineer by trade, but like an aerospace engineer in background. He had like Java and Python skills, I believe was his stack. And he had done some Solidity boot camps on the side, but like had no professional experience in Solidity, right? Talented engineer, smart kid, top company, but no crypto experience and no even real life applying those programming skills. I got him an offer from one of Daniel's framework companies for 175K plus tokens, which I thought was a really, really solid offer for someone at his level. Keep in mind, he only had 2 years of like total work experience, right? So 175 plus token. BlackRock came in at the last second and gave him $280,000 cash. He was making 115 before that, so over double for someone who doesn't even have any crypto skills. And I think like that was just a sign of the times of what was going on. We're not seeing that type of money being thrown around at the moment, but yeah, and I would say, you know, one thing that hasn't changed too much from bear to bull is like for an engineer with, you know, for a strong engineer, whether Web 2 or Web 3, I'm not seeing many of these framework companies go over 250K. I would say that's like the super max on the cash side. Would you say that's consistent?
Yeah, totally. And that's what we advise our companies. Like, honestly, a tactic, so before I was at Framework as a founder, like many times over, and like one of the things that we always did when we would hire is it's almost like a test, right? Like you go out to market and you say, hey, we're gonna give you 3 packages on a sliding scale of salary and a sliding scale of equity or tokens, and like which one do you take? And it's actually a lower overall compensation package if you take more cash. It's a higher one if you take more equity. You value the equity in like a fair way, but accounts for like sort of like a net present value of like future, some expected like growth in the future. And it's almost like a test, right? If you're like the engineer who wants 280 in cash and no upside, rather than who wants like 180 or whatever with like huge upside in the company, you're probably not the person that the company actually wants to hire, right? So it's almost like a litmus test, like at that level. But yeah, we don't see 220 to 250 is really like kind of on the high end of cash that we're seeing right now.
For sure. And yeah, for sure. And yeah, agreed.
We're just talking about technical roles, right? Do you guys have data or information on some of like the softer skill roles or the non-technical roles, or are we just mostly focusing on the engineering salaries in Web3?
So it's kind of interesting because a lot of companies are almost entirely engineers. Like when you look at the stack, like from the founders to the early hires to the latter hires, like there's just a lot of technical people. But it's funny in that actually a lot of our top performing companies are actually not the inverse, but they're the companies that have the most business hires, right? I think as you grow as a company, if you want to go from the next level of like not just deploying code and like having some TV outcome and maybe like popping off on Twitter and having some people like find out about you or whatever, and you're really running like proper business development cycles, you have customer support, you know, you're marketing, you're engaging with like the broader press. Like as you become a more holistic company, you naturally hire more operations people, business development people, marketing people, et cetera. And those are actually the most successful companies we have. I guess anecdotes on the business side versus the technical side. So salaries are generally lower and ownership is a little bit lower. But it really depends on the role. Like I'll say senior business development and sales hires, I've heard from a number of companies, are actually the only thing rarer than really great technical hires, right? Like there's just not a lot of people in the space that know how to navigate, they know all the players, they can speak the language, because it requires like an especially technical form of business development person. So actually like some of the highest comp in our whole survey were actually senior business development hires, higher even than like CTOs and engineering hires in some cases. An interesting anecdote too I'll share is that on the business side, I think 75 or 80% of the hires were US or UK based, whereas on the engineering side, 75 or 80% were outside the US or UK. Like kind of a fascinating trend, like the engineering hires are much more distributed, much more international, and the business hires are more concentrated in the places where customers are, which seems to be an emerging trend in the space.
And another, just to piggyback off that, I would say like one of the biggest gaps I've personally seen in all of hiring in crypto is definitely on the sales biz dev side. I think the gap is there's not that many people that I've come across that can do, you know, both the institutional sales as well as, you know, DeFi biz dev on the protocol side. And I think it kind of speaks to the fact that kind of one of the biggest challenges that I've personally noticed in our industry is the fact that the TradFi institutions and the DeFi degens speak a completely different language to an extent, right? So one of the hardest roles that I had to fill, I saw my man Uda from Friction Labs is here somewhere in the building. They're a DeFi protocol doing options trading and structured products on Solana, and they were looking for a head of institutional sales. That was one of the hardest roles I ever had to work on, because finding someone who's an expert on institutional credit but can also, hang with the degens, that's a rare find.
Totally.
I wrote an article for Decrypt called GMGN, like a guide to crypto slang, and I gave it to my friend because she is pretty new to working in Web3, and she's trying to get on board with the whole community and the whole jargon and the slang and everything. So it's definitely a learning curve for that. But
Yeah, 100%. And if I could just chime in one more thing, it's another trend on the sales side that I'm seeing right now is just like, obviously, when the market started to crash and go down, like the first people to get laid off from all these companies are sales, marketing, biz dev, partnerships, anything to kind of do with growth, right? So, and for that same reason, the roles that are being hired for right now are mostly in the realm of product development, engineering, and just builder roles overall. So there's scarce opportunities right now for growth hires, and there's a ton of qualified, experienced crypto talent floating around the market. So it's highly, highly competitive at the moment right now.
Yeah, and actually on the sales biz dev side, like I'll shout out Immunify that was up here before, framework portfolio company. In fact, we just announced yesterday, the day before, biggest check we've ever written as a fund into them, like incredible company. They're an example of someone who's done a phenomenal job actually hiring out the business roles, having like a core of like deeply technical people and allowing that to really like spur growth of the company, drive revenue, and just become like a more holistic business and complete business like as they've continued to grow.
And let's talk about the bear market, because just briefly, because I realized that that's kind of an elephant in the room, and there were so many layoffs. I mean, for months there were it was article after article, just Coinbase is laying off, Gemini's laying off, this company's laying off, that company's laying off. How does that shape what's happening right now for people who are trying to get a job? Like, what does that look like? And do you think it's as bad as the media may have purported it to be? What are your thoughts on the state of the job market in crypto in the bear market?
Yeah, I could chime in. I would say it's pretty bad. It's pretty bad. Like there was a lot of irresponsible hiring. I mean, as a recruiter who's committed to being 2 feet deep in the crypto community and here for the long run, I changed my strategy a little bit when things started to go down, and I just I wanted my reputation to be the guy who took everyone's call when things were tough and tried to help as much as I can. So I really spoke to a ton of BlockFi, Celsius, et cetera, you name it, people that were leaving. And I'm not gonna lie, it was scary sometimes to see some of these people who realistically were not qualified for the job that they got hired in. And it's just the reality of it. They were not qualified for these jobs, and now they're coming into the market thinking they're a real DeFi trader, and you're now competing with actual people who are actual traders, and that's a long road. So yeah, it was pretty bad.
Yeah, totally. And Dan's more in the trenches on this and has had a lot of really good anecdotes to share. I mean, the thing I'll say about it, though, too, is to my point earlier about the companies being smaller and the rounds being equally big, we did like a holistic analysis of our portfolio right after the whole Terra blow-up happened, and we saw all these reports of layoffs, and we were like, what shape are portfolio companies really in? And we asked everyone, like, what does your runway look like? How much cash do you have in the bank? How much are you spending? Ran an analysis on that, and the results were actually really good, right? And partly, there's some bias there because all these companies had been funded by, venture capital firms in the last 12 months for the most part, but crypto companies don't really spend that much money, was what we learned, compared to Web2 companies. Like, they have fewer people. There was a lot of overhiring. I think in the sort of centralized space, like exchanges and players like that, there was a lot of overhiring. I would say on the decentralized side, there was never enough talent to hire quick enough to really spend the money they were raising. So I think out of our 100 portfolio companies, sub 10, maybe sub 5 had less than a year of runway, or less than 6 months of runway. They were actually in very good shape. I do think hiring slowed down a lot during that period, though, as Dan can attest to. And people are just pickier, right? People are only hiring the best of the best. They're only hiring essential roles. It's probably a healthy reset, but they have cash in the bank to grow, and I expect the hiring will actually pick up through the bull market as people find product market fit and figure out exactly what they need.
100%. And one other interesting thing that I've noticed, you know, from bear to bull, is I think in the bull market, like it's really interesting. Like you take one particular candidate, for example, and you'd say, okay, well, this guy has a background in finance. He knows technology a little bit. He's good communicator, good relationship builder. Okay, he can add value. He or she can add value in a number of different areas, right? And so they're really going to make a nice offer to that person, and they're going to be like sort of contributing holistically to whatever's going on in the protocol. And now what I'm seeing is that same candidate who was wearing multiple hats, adding value in multiple areas, is now looked at as a generalist as opposed to a specialist. So right now, when companies are being really conservative about their spending, like you're only looking for the one person who can do this particular thing better than anyone else in the market. That's what it is. And that was so not the case a couple of months ago.
Yep.
Well, thank you both for coming on and sharing all that alpha. I really appreciate it, and I'm sure the crowd does too. So have a good Friday, everybody.
Thanks, guys.
Thank you.